Hi, this is Zach Meir with the weekend edition of the Bulletin Board Heroes. It is Sunday, the 6th of February, and all our favourites in here this week, I think. First starting off with AMO Minerals, where we've got this line of resistance, 3.8p. Need an end-of-day close above that to give us the 5 to 5.5 pence at the June resistance line projection. This stage only really well below the 3 pence level, 2.8, 2.7, really upsetting the bull argument, but I suppose there would be an opportunity to buy a dip towards 2.8 as we had at the turn of the month. Moving along to ARC Minerals, we've got a slow turnaround with the break of that resistance line there from March. That was around the 2.5 pence level. New support coming in at and above old resistance at 3 pence, and above that looking for 6 pence at the top of a rising July trend channel. And the time frame on the upside there, perhaps as soon as the end of next month. A quick break of the 200-day moving average at 3.88 would be a nice bonus over the next few sessions. Moving along to Contango, which I suppose after testing the 6 pence area about 100 times over the last few months has finally had a decent breakout, a very decent breakout on Friday, so breaking 8 pence with quite a bang. That was the line that we were looking for to be broken. In terms of the upside, we had a rather optimistic-looking resistance line there at from this time last year at 14 pence, and obviously with a 1 penny move on Friday, that doesn't look as optimistic as it did before. Could see that by the end of next month, and if we're really lucky, by the end of this month, and only really back below 8 pence now, questioning the ongoing bull argument at Contango. Another stock which is having a go at recovery is Gcm Resources. Beautiful bull flag either side of the 200-day moving average. That's around 6.05 pence, and at least while we're above recent support at 5.55, looking for 9 pence as soon as the end of next month. So all these mini miners again looking much better than they have done in quite a while. Going on to a stock which is not in the same space, but sort of blast for the past, let's say, a Gulf Keystone. Here you can see that Friday was also a great day for this stock, and it looks like we're heading towards the top of the rising trend channel from the start of last year. Depends exactly where, you could sort of argue exactly where it is, but the best case scenario probably at the moment is that it's heading towards, or the resistance line there is heading towards £2.90, and that would be valid while we held above, at least while we hold above 227, which was late January resistance. Maybe the stop loss down to 220, but ideally there's no break below the upper 220s for Gulf Keystone rather. On to a stock which took it's taken a while to consolidate in the sort of the 10 to 12 pence area, but Friday again, a big blast to the upside for i3 Energy, and the 28 to 30p target that I had previously now not looking quite as overly optimistic as maybe it did even just a week ago. Oil obviously doing very well as well, but it's just that pattern here of that sort of saucer formation that we've got on the daily chart since July, and breaking the neckline there around 15, 16 pence very comprehensively at the end of the week. So very encouraging there at i3 to hit maybe up to 30 pence by the end of next month. Stock which I don't actually remember covering, but given the support and resistance lines that I've drawn being there, here it is. We've got a V-shaped bull flag breakout for Origo, and above 0.23 pence, looking for 0.33 or even 0.35 over the next few weeks on that situation. Not sure what the fundamentals are there, but obviously the situation was a charting situation in the low 20s and has improved since then. Moving along to a stock which has been a slow burn for quite a long time. I know it's got its fans, Premier African Minerals, which if I get the right stock will also help as well. Here we can see that we are counting on the shares breaking and holding the 0.25 area over the next week or so. If they can do that, then 0.4 would be the target as soon as the end of next month. Also counting on the 50-day and 200-day moving averages rising in parallel, or rising as a golden cross over the next few weeks, and that should accelerate the upside scenario for Premier African. On to another stock which is doing rather well at the moment, Petrotal. Here we've got a rising trend channel that's been in place since August, top of the channel heading for as high as 50p, and we're looking for that while we hold above the floor of the channel at 30 pence. Stock which I'm happy to see is back on track in terms of the upside after the recovery from the main 6p area is Pires. Here we're dancing either side of the 200-day moving average at around 7.6p, but the weekly close above that should now open up the prospect of a 10 or 11p target as soon as the end of next month, with the especially as we've had that brief bear trap in December below the main 6p area. It's almost like an inverted head and shoulders formation for this situation. On to THG, where you could say that the market seems to be almost in a frenzy about this, and all the bidders circling and all the action potentially happening. I suppose one would have to question why the shares fell down so much if there was so much enthusiasm waiting in the wings. But looks like the stock's found its level. So the low on Friday around 113, and great intraday reversal for the shares. I suppose if you're cautious, you might want to see an end of day close through the 143p area, but obviously with the fundamental speculation, the easiest thing here is just to say that a break of 140 should lead to the 50-day moving average at 178 in a pretty short order for the stock. The other plus point, which we've had here for quite a while, is the bullish divergence, and I suppose on that basis, that bullish divergence line there from back in October, the buy point on that basis would have been the bounce off the bullish divergence line right at the end of December, or right at the end of January rather. But I suppose it was actually at the same sort of level, so you'd have to be in there in the 120s or low 130s, which wouldn't really have helped you that much. But we've had another bounce off that line at the end of the week, and let's see how we go towards the 50-day moving average, only back below, let's say, the old floor for the shares, which was 118, really delays the upside or the recovery argument. Another stock which is trying to recover, has been trying to recover, is tertiary minerals. Here we've got a nice bull flag there above the resistance line there from June, so above 0.21, let's say. We're hoping that we'll see a move towards 0.3, maybe as soon as the end of the month. Now we've got that bullish divergence line there from December, and that should guide the shares slowly higher over the near term. Might as well throw in OilX, because people seem to be, that's the other stock that people seem to be wildly excited about at the moment. I suppose the good thing about this situation is that even though we're potentially in a binary bet situation, the good thing here, as opposed to, say, Advanced Energy, is that we're still relatively low in the range. I suppose you could even say that about Amur as well. So when you have a bet in that sort of thing, it's that sort of area where there is a big piece of news potentially coming. It's much nicer or more pleasant to be there in the low end of the range than the high end of the range if things potentially go wrong or get delayed. So about 0.2, looking for 0.45 on OilX. That seems to be relatively easy to predict, given the way that you can draw a rising trend channel from the end of 2020 running towards that area at its resistance line. And we've also got an uptrend line in the RSI window as well. So let's see how we go with that, but everything dependent here on holding 0.2, 0.21. That's it for me today. More updates during the week.